The price of Bitcoin exploding to the upside, and it does look like it's not going to stop anytime soon. Just after yesterday, the interest rate cuts and the FOMC economic projections, we are just pumping like crazy, and the S&P 500 hitting new all-time highs. In this episode, we'll be going through the most important levels of resistance that we are very close to, where the price could reject, and also the levels of support where the price could bounce, and if lost, we could be going to much lower levels, guys. And I do understand that if you are a perma bear, that you believe that the price needs to reverse at some point, that there is no volume on this breakout, on this pump, and the price needs to reverse. We are breaking out from the diamond bottom reversal pattern. Now, the target zone is hitting all-time high. Of course, this doesn't have to happen in the next coming days. We could retrace down and then pump in the next coming weeks, guys. But overall, it is a good sign that the bulls are currently in control. So let's dive in right away and talk about the levels of resistance, the technical analysis, the levels of support that need to hold for this uptrend momentum to continue. Because if it is lost, we'll be going to much lower levels, guys. Remember that the World Series of Trading is going to be starting in October. If you haven't got a Bybit account, make sure to sign up. You get that $500 free airdrop to trade BTC, Ethereum, any of these altcoins, and it's for free, guys. Just sign up and claim that airdrop voucher, and you already got your Bybit account. So then you can join the team in October. I will be announcing this every day on YouTube, guys, so you won't miss out. Let's dive in through the technical analysis right away. Keeping it simple. We are just pumping like crazy. We had a pump here a couple of days ago, rejected, and then coming to the upside. By the way, we were actually having fun with this descending wedge yesterday, saying, hey, is this a bullish pennant? And this is the poll, and we're going to get the breakout, all right, and come to the target zone. Sometimes these basic technical analysis textbook patterns do actually play out. So we had the descending wedge. It broke out with the volatility from yesterday's news. We managed to hold our support and just continue to the upside, very close to the target zone here at $62,600 range, right? So overall, this kind of played out, right? These basic patterns, sometimes going to the basics, you just need to take them into consideration. Let's dive in through the momentum and the strongest levels of resistance that we do have. Something interesting to note is that also yesterday we did maintain as support right over here the point of control from this consolidation that we had in between August and September. Okay, you can see right there how it bounced very nicely with that descending wedgie structure. Now, getting this breakout, we need to analyze, okay, we are in an uptrend channel. We are forming higher lows and higher highs. And the interesting thing is the resistance of this channel, which is sitting around about $63,500. That is if we were to get up there today. If we were to get up there tomorrow, it's extending more to 63.7, 63.8. Now, this zone is very important because that is where we have the 0.88 Fibonacci from the highs of August to the lows of September. The 0.88 Fibonacci is sitting at $63,500. We do have a daily naked point of control from this consolidation. We had one only slightly beneath us that just got absolutely smashed, as you can see here at the $61,700. Now, when we zoom in, there is a lot of confluence here at this $63,500. We have a daily naked point of control, which is sitting at 63.6K. We have the resistance from this channel, and we have the 0.88 Fibonacci. 0.88 Fibonacci on the higher time frames has been respecting very nicely throughout the last few months. When we analyze some pivot highs and pivot lows on the higher time frame, we can see this pivot high to this pivot low. We can see the 0.88 Fibonacci right over here getting a big rejection. There's multiple ones, guys. When we do take a look at this pivot high right over here to this higher time frame pivot low, we can see the 0.88 being an extreme level of resistance. So the reactions are there on higher time frames at the 0.88. This is why I am concerned that the $63,500 range, if we do get up there in the next coming hours or days, it is a significant level of resistance, because we also have a daily naked point of control right over here from the 26th of August, right? We got that consolidation here. We have a high volume node that hasn't been tapped, and this right over here could definitely provide that resistance. Funny enough, it is the resistance from the ascending channel. Let me just get the session volume profile here so you can see that naked point of control on the daily, all right? It is getting the fixed volume profile from this candlestick. And when we do zoom in, that is where we do have that high volume node on the volume profile. So we need to pay attention to that level. For the moment, the price action is very much bullish. We're just going up and up and up. So there's no main reason here to believe that, hey, we are going to be getting rejected here. We're just getting a slight consolidation right now as we're hitting the 7/8 Fibonacci from the highs here of August to the lows. We've traced that Fibonacci retracement. It's getting a little bit of a reaction here throughout the last few hours. But the bigger resistance for me is 63,500. 0.88 Fibonacci, the naked point of control, and we do have the resistance here from the channel. If this is broken, then we are breaking out from this ascending channel, meaning that we just could be going to much higher levels. I will not be doing any funny business here with short positions if we break out from the channel and we get above the 0.88. It's just going to be looking like that we're just going to test these highs and absolutely blast through, okay? So we want to be very much aware here of trying to short. We are very bullish for the moment. The price action is very bullish throughout the last couple of weeks. So the only level that I would be interested in placing a swing short position kind of trade would be at this zone. Of course, intraday trading is always mentioned in the Legends trading community, guys. That is where I focus every single day on the local range. If you are interested, you got the first link down below to join the Legends trading community, where me, the rest of the coaches, do provide that daily analysis and setups, just like the long position at $59,300 that we provided yesterday there. So let's go and talk about the levels of support. Now that we know that the higher time frame resistance is 63.5K, that is the price that's where the price could struggle very much, all right? We could hit the level, get one quick pullback, come back up, create a double top, right? That is the reaction zone where the price could top out and get a significant pullback in the next coming days after that level is hit. So if it just breaks through, guys, then breakthrough, we just go to higher levels. It will be looking insanely bullish if we do break out from this 63,500 successfully, guys. I would just say that the price is just going to move up to higher levels, right? Now, the level that needs to hold as support here, let's get some levels of the chart and the Fibonacci retracement. Very important level that needs to maintain, just keeping it basic on this uptrend momentum, is the higher low support here from this ascending channel. Now, there is a possibility if we do come all the way down to $59,000 area, all right, yesterday's lows, we do have a possibility of a reaction here, swing failure pattern. We get back above, we form bullish CVD divergence throughout the day. If this happens today or tomorrow, it is a level that needs to hold. You got higher low support, you got a sweep of these lows, and there is a chance that the price could maintain this zone. We're going to be paying attention to the reaction here to see if it is a good, valid long position, all right, to just continue the momentum to the upside. Keeping it a little bit basic and simple, guys, so you understand. Now, if we do solidly break down from this low, okay, and we are losing today's levels, right, which is previous day value levels, all right, without a doubt, this is kind of the last line in the sand where the price just sweeps up the liquidity from that low, gets beneath the previous day value area low at this zone, maintains higher low support. We know the deal. We like liquidity grabs. You get back beneath the low from yesterday. You maintain as support. I would be interested in long positions here, but I would be very careful analyzing what is happening here with the data, with CVD divergence, all right? form those local bullish ones to see the reaction and the possible bounce. But if we just slice through the level, then obviously this is going to be a little bit of a sign of weakness. If this higher low support is lost, then obviously the next level is coming all the way down to this low right over here. Now, looking at the levels, we do see that these lows right over here, we have a daily level that has not been tapped, okay? When we go to the daily chart, we can see how there is that daily close and open that was not tested right over here. So if the lows are tested, we do have that daily level that could definitely get a reaction and a swing failure pattern, okay? So I'm interested in a quick reaction. This would be like a scalp long, okay? It is a good level. The main reason why this is a good higher low for an SFP is we have a daily level exactly right over there. Now, it is too early right now to take a look at Fibonacci from the pivot low to the pivot high because we're just trending to the upside and we're likely going to go to higher levels. So if this were to be the pivot high, then we're looking at Fibonacci confluence. And this higher low right over here is the 50% Fibonacci from the low here to the high. So yeah, this is a very, very good level for a swing failure pattern. If the price were to collapse down to that level, you got a reaction bounce here without a doubt. Sweep up the lows, 50% Fibonacci from the low to the high. Daily level would be interesting to get into a nice scalp long at this level, okay? Just some internal levels. I like this level for a bounce. I like the possibility of sweeping up this low, maintaining support. This is going to be a patient game, okay, to see some strength and some support, to look for the bounce and continuation to the upside. That is a zone of interest. And if we continue pumping, guys, the level where I do expect a significant rejection of several $100s or even a couple of thousand would be at that naked point of control here that we do have from the 26th of August, which is also in confluence with the 0.88 Fibonacci and the resistance from the ascending channel. A little bit of higher time frame analysis, guys. If you want more in detail analysis on lower time frames and possible setups, you know where to go. It is the first link, guys, the Legends trading community on Discord. Thank you, and I'll see you in the next one.